Hey everyone, welcome back to Kitco Mining. I'm Jeremy Safran. Now, the global mining industry is facing a crisis of discovery. Major producers are struggling to replace their reserves, and genuine world-class deposits are becoming critically scarce. This reality has forced a laser-like focus back onto two fundamental principles that every mining investor understands: jurisdiction and grade. Now, the market is now pricing an enormous premium for high-grade ounces discovered in safe, mining-friendly districts. And that's precise thesis behind our next guest company. West Point Gold is operating in the legendary Walker Lane trend of the USA. And of course, they're hitting this type of width, high-grade intercepts that the industry desperately needs to see. And their CEO, Quentin Mai, is a veteran of this exact strategy. He was key executive at Corvus Gold, which successfully defined a major discovery in the same district, leading to a $570 million buyout by a major producer, AngloGold Ashanti. Quentin, great to see you. Welcome to Kitco Mining.
Thanks for having me, Jeremy. It's great to finally get on the show.
Yeah, it's so many things going on in the industry. You and I were talking a little bit about it before. And in this industry, starved for new discoveries, let's go through this. I mean, your recent drill results at Gold Chain are getting a lot of attention.
Well, they sure are. And that's actually one of the things that is most exciting about this opportunity right now is that, we're in one of the most prolific mining districts that, quite honestly, the Walker Lane in the southern part of Nevada and extends just into the northwestern part of Arizona, is a historic mining district. And those of us that look for gold, the best place to look is where gold has been mined before. This is a very, very productive district historically. It's a pro-mining district. And the best part about it is that you've got a lot of opportunity here that's as yet been undiscovered, as we found out with the Corvus opportunity, which ultimately became a deposit discovery and an acquisition by AngloGold Ashanti. That's just showing essentially the gold world that there's some incredible opportunities in underexplored districts with historical mining opportunities, Adam, like what we've got here.
Mm-hmm. Yeah, let's get into those results a little bit, Quentin, because on October 6th, you announced an intercept of 32 meters, about 3.17 grams per ton of gold. And the project has a history of even higher grade structures. I mean, 9 meters, 51 grams per ton. When you see this mix of grade and width, what's the ultimate geological prize you believe you're chasing at Tyro? I mean, are you defining a large open pit deposit? Or are you vectoring, in on the high grade feeder zones that could really change the project's economics?
Well, I think, kind of internally, we kind of joke a little bit to say that you're talking about the high grade target, and we're technically calling it what we're saying is the obvious target. That's our technical word for it, because we're on a 3.4 kilometer structure that's historically mineralized. And when I say historical, I mean 1900 to 1920. It was mining, just like out of a movie, half an ounce, or even better in the Oatman district in the northwest part of Arizona. And essentially, our site geologist, Rob Johansson, saw this opportunity. We actually put together an entire district play. And the first part of that structure, which we're calling the obvious target, is called the Tyro vein, or the Tyro Main Zone, which has a historical mining shaft at it. It even was heap leached briefly in the 1980s, but has not been put under one company's umbrella ever for kind of a district scale exploration model. And so within that Tyro structure, we've got 3.4 kilometers, but 1 kilometer of that is actually at the surface. So when you mentioned that 9 meters of 51 grams, that was actually a hole drilled and announced in early 2023. As we all know, that was before the gold market really got exciting and has really grown across everybody's radars recently. And so the market really didn't think too much of that hole at the time. However, essentially with my background at Corvus, I saw that and I was very excited and thought, how do I get involved in this company? And is this a true analogy for Corvus, which is on the other side of Las Vegas? So on the same district, at the time, what I did is I actually had Corvus Gold site geologist, chief geologist Mark Reichman. And after Corvus got bought, he was actually the only employee that actually got hired on by Anglo to continue to work for AngloGold Ashanti. He had left Anglo a couple of years ago. I invited Mark to site. He took a look at it and said, this is about as good an analogy as I've seen for that project in the district. And Mark is now consulting to the company as well and working with our site geo, Rob, to kind of help our program. So when I start to look at the specifics of those numbers you're talking, that 1 kilometer is an incredibly compelling target for us to drill. And as we all know in the exploration mining business, the market pays you to discover and hit economic grade. So we've really channeled our treasury into defining and developing that portion, that 1 kilometer of the 3.4 kilometer structure. However, that really is only the tip of the iceberg. And that's the thing I can't stress strongly enough, is because there's another northwest trending structure that crosses it. That's also got historical mining. That's 15 kilometers. And so we've got a lot of different multi-million ounce targets in the entire district. And essentially, we're trying to drive the value of the share price of the company, the market cap in Tyro, to tie it back, which is the obvious target. And if we can get our arms around the model that we've put out at the beginning of September, which is 19.5 million tons to 31.9 million tons at 2 to 3 grams, open pit, that is a pretty compelling argument to see our share price increase and then allow us to go out and chase some of the other targets there.
I want to jump into that asset a little bit more, but before we do that, I mean, it's a key point because I was reading, a past interview. I mean, your team's geologist was quoted as calling the nearby Frisco Graben elephant country, right? And likely the source of the gold, yet your drilling and current exploration targets are focused on that Tyro vein. You kind of explained it there a little bit, but for the audience, I mean, what's the strategic thinking behind proving up ounces at Tyro first before going after the potential source of the entire system?
Well, as you know, in this business, we need to just deliver results to our investment community. And that is, and as I mentioned to you, the obvious target being Tyro, because it is open pit. There is a superficial expression, and there's actually a historical mining shaft right there. And so with the grade we're getting at the drill results that's happening right now, that hopefully will drive the value so that we can go after some of the quote unquote less obvious targets, and as you mentioned, the source of the gold being the Frisco Graben. And that was specifically the one that Mark Reichman pointed out is this is Anglo would be drilling that. They wouldn't even be drilling Tyro right away. However, as you know, as a producer, they have some flexibility with it being able to miss. We did put 4 holes into the Frisco Graben in the spring as an education or a knowledge-based exercise. We hit all the important things without hitting gold, meaning we hit trace elements, mercury, arsenic. We hit the structure, but it was pretty clear we drilled too high in the system and we need to go back. But as mentioned, if, in this kind of market, if we're, drilling 15 to 20 holes and missing on a large number of them, as you can imagine, the market is going to start to wonder if we're going to get lucky or not. This is a bonanza type opportunity to hit at the Frisco Graben. However, as mentioned, if we get to a point where we've defined a meaningful world-class opportunity at Tyro, that'll give us the ability to go after and start chasing the source, which is Frisco Graben.
Yeah. And on that point of scale, I mean, your last press release noted that the true widths are approximately 50% of the reported downhole widths. I mean, give our audience some context on the geometry in the dip of the Tyro vein system and what these true widths imply for the potential of a bulk mineable resource here.
Well, taking a look, the best part about this structure being, beside it being open pitable, is it's fairly consistent from anywhere from 20 meters up to 50 or 60 meters, but it goes from the northeast down to the southwest. It's very contiguous, consistent. As we've been doing more drilling, we've been learning as we go, hitting the structure. We did a 1,000-meter core program last fall, which was very informative for us to get an idea that the structure and a good kind of base analogy is that the north end of it is kind of like the tree trunk. It's the thicker, consistent grade between on the northwest side of it, you've got a footwall, and on the southeast side of it, you've got a hanging wall, which is a little bit more porous as you head south, meaning the gold leaches higher than the hanging wall, but the full stop on the northwest side is the footwall. And so we get much higher grades, as you've seen, that holes 47, 48, and the fantastic 149, which you referenced at the outset, which was 60 meters of 4.7 and 30 meters of over 9 grams. As we move our way south, we're getting the 30 to 40 meter intercepts of 2 grams, and surrounding that are lower grade oxide-ish or non-sulfide at least, that are 89, 90 plus meters of a gram range. So, and that would be compared to the tree analogy where you'd be getting into the branches and the leaves. So at the northern end, you've got kind of the base of the structure. And then as you work your way south, you're working your way into the kind of the lower grade, but the lower grade is still in the gram range and 100 gram meter intercepts as we head south. We also believe it plunges south and heads towards the Tyro South. There's a fault structure there, a post-mineralization fault structure called Banner Sheep Trail. And it's actually on the other side of that we're about to start drilling on in the next 4 or 5 weeks to see if that extended part of that drills as well, comes up with mineralization or economic as well. And there are historical mine adits and shafts around there that the waste rock on them is anywhere from 10 grams up to 2 ounces of gold that have been sitting there for over a year, 100 years that have been untested. So this is why we're so excited to get on the Tyro South end, all of which are more obvious targets than going back to the Frisco Graben where the source might be. And to give you an analogy of why Anglo Gold was, they had the similar graben on the analogous project, which was Corvus. That's over 10 million ounces and looking like it might be 20. So 20 million ounces. So that is a pretty significant target, but you just need to be prepared for us to miss if we're drilling. And we want to continue to hit, which should drive the valuation.
Yeah, makes sense. And we got to get into that Anglo deal. But before we do, I mean, you mentioned the mineralization at Tyro appears to be oxide from surface. I mean, for a project in Arizona, that's a huge potential advantage. Have you done any, preliminary metallurgical work? Can you talk a little bit about this oxide mineralization, what it means for potential processing paths, and not only that, but the future economics of the project?
Well, funny enough, our executive chairman, Derek McPherson, actually is a metallurgist. So he's extremely mindful of metallurgy from the beginning. And so what we did was we did some first pass metallurgy with some tailings and announced those results in July. And basically, the only thing we were testing is, again, we're in a low sulfidation system. We wanted to make sure that there was low sulfur there, which is what we were able to prove. So that's the first pass of metallurgical testing. As you know, metallurgical testing is expensive and it takes time. And so what we've done now is we're actually in the process of doing our second stage of metallurgical testing. And in the first one, we did not do any grind size. All we were just trying to test for was low sulfidation system, which we proved. We also know that the project was heap leached in the 1980s, right around the Tyro structure. There's actually a mining cut there that was pre-sold at 4 grams. They actually mined 2, but they sold it at 4. So we know it's amenable to heap leaching as well. But given that grade, you can imagine that, most times when you're heap leaching, a lot of it's much lower grade or sub 1 gram. But if you're given the fact that our model is over 2 grams, there's most likely going to have to be a grinding component to it, because presumably, just base case scenario, you can get 20, 30% better recoveries with grinding. So that's the sort of testing we're doing right now. And that ultimately would be likely to be seen in the new year. But all the signs we've got right now are that the metallurgy should be, again, low sulfidation, which should mean we're going to be amenable to heap leaching. Now, what the grind size, as you know, is going to have a pretty big impact on how or meaningful impact on the economics of what
Yeah.
kind of modeling is going to happen down the road. So everything's positive, and we're going to continue to push this work forward.
Yeah, well said, Quentin. I mean, let's talk about that $570 million buyout of Corvus Gold. I mean, that experience tells investors you know how to build a company that a major producer will want to own. I mean, majors are looking for district scale potential, and your recent acquisition of Baxter Springs in Nevada, combined with the Kinross JV at Jefferson Canyon, I mean, it seems to be consolidating a strategic footprint across the Walker Lane, right? I mean, is this a deliberate echo of the Corvus playbook, kind of building that dominant land package to become the most logical acquisition in the district?
That is exactly the model. And it was actually why I joined the company kind of 14, 15 months ago, because the lion's share of the work is going to happen at Gold Chain. We've got something significant there that we're really needing to focus our treasury and our efforts on. However, given the proximity to Round Mountain and Kinross's interest in not only us, but some of the other companies with assets in that area, you can imagine the importance of that asset. And anybody that's in the gold business right now can understand that there's always a premium that's put on anything with a resource on it. And the opportunity that presented itself with Baxter is it's actually a good analogy for Gold Chain, in that Gold Chain still does not have a resource, but it's got all the smoke there that there's something significant, potentially even world class there. And we saw the same signs at Baxter Spring when it was presented to us, because a lot of the reason we ended up with that primarily is because of Gold Chain, that we were able to buy that for shares, not cash. And a lot of these other assets, as you can imagine, if there is a resource on it, it's going to be highly sought after by a lot of different companies. The cash premiums are going to be significant. And because this isn't at that stage yet, we were able to get it. And given the fact of the development and the opportunity, the upside with Gold Chain, the people vending that thought, okay, I'm going to go put in with you guys with respect to the equity stake in West Point and its ownership in Gold Chain, given the fact that we can pivot and take a look at Baxter Spring and drive valuation that way. And hopefully that's in a position which we can start doing some work at. It's got 11,000 meters of drilling, RC, another almost 2,000 meters of core. It's got historical mining. There's 1,000-foot adit of historical mining at it. One of the first things we want to do is have somebody go into that adit and start doing some samples off the walls. Because if it was mined 100 years ago, you're looking at probably no lower than 10 grams. Again, I'm just guessing here, but the fact is, if it was historically mined, there's a pretty compelling reason it was, and that work has not been followed up on modern day. Yeah. So, and the presumed valuation of the drilling that's been done to date is around $10 million US, and we purchased it for the equivalent of 6 million Canadian in equity. So, and all purely and simply because of the stage that Gold Chain is at, and the upside there will allow us to take a look at that and create additional value for our shareholders.
Yeah, well said. I mean, Quentin, you touched a little bit on value there, but let's talk about that, what that playbook is worth in today's M&A market. I mean, your own Corvus deal set a pretty high benchmark. More broadly, we're seeing North American gold deposits with kind of a defined resource getting acquired for, around $150 to $200 per ounce in the ground. I mean, is that the kind of valuation benchmark you're building towards at Gold Chain?
You know what? What's funny about that is I actually had a conversation about that very point with Derek McPherson this morning, because as we know, historically, and when I say historically, I'm talking 2 years ago, historical this time, most of the time, a rule of thumb, gold in the ground for a resource, you're looking in North America, $100 an ounce is actually a pretty darn good return. But that was pre-$2,000. Gold at $4,000. Open pit, I think those of us in the industry are going to have to start looking at a new playbook of what valuation should be, because it is true that every asset, every deposit is different. But when you're starting to look at what's around the district, remembering that, at least with Corvus' sake, Anglo Gold has consolidated that district, and they've spent nearly $1 billion now in the last 5 years putting that district together. But they've got well over, at least showing now, 14 million ounces, which looks like it might be coming up on 20 million ounces. So, there's like a kind of a district focus going on there. In our area, as mentioned, we've got Kinross is on the other side of the Walker Lane. We've got now Anglo with an expanding footprint, and you've always got the other mid tiers that are also looking for opportunities as well that quote unquote are world class. And this is what is great about the Walker Lane, is that there's really only 2 world-class deposits on it that are known right now, which is Round Mountain, which is newly mined out, and now the projects Silicon Merlin, which is formerly Corvus Gold, which are the Graben there. We're thinking that potentially there's an opportunity here for something significant as well. And that's not to say that there's only 2. There's more, and we think we've got the smoke and the signs that we might have one with West Point Gold as well.
Mm-hmm. When we look at this, it kind of brings up a good point. I mean, you guys are fully funded. And the fact of the matter is, we look at some of the juniors now. I mean, I get the private placements as well. And we see that there's a lot of funding happening right now at these gold prices. I mean, it's a key differentiator. Your last $8 million financing was heavily backed by a top tier mining fund in VanEck. I mean, that's a pretty rare one there. How critical is it to have that smart money validating your story? And what does that signal to the market when a sector specialist, not just generalist money, leads your financing round?
That was incredibly significant, and specifically because the driver behind that at VanEck was Joe Foster, who was also a shareholder of Corvus, and Joe's background also is actually mining in Nevada. So we understand that the gold fund at VanEck actually owns only 2 discovery companies. The rest are development or producers. So it's very compelling. And I'll tell you, Joe has been already, just in being a shareholder for the last few months, has actually already been a huge advocate for our deposit. He's been to site now, blessed it, and been very supportive of us with everyone he talks to as well. Prior to that, the shareholder base was largely retail. US Global has just under 1 million shares. Kinross is also a shareholder as well because of the joint venture with Jefferson Canyon in Nevada. And so with that being said, that's the largest sort of component of institutional shareholder that we've got. And that's the foundation for us to get that credibility and take the company through the next level, which for us is a maiden resource at Tyro.
Yeah, well said. And I mean, on that note of shareholder alignment, insider ownership sits at about 5.5%. I mean, you got this VanEck, you got Kinross. The market often wants to see, management skin in the game too. I mean, are people buying in the open market? The stock seems to be doing well.
The stock has done very well. We did our financing in June. It was a life financing, so there was some free trading shares which came into the market almost immediately. So if you saw the stock drop from June through essentially September, that was the quiet period. We weren't doing any drilling at that point. This area of Arizona, outside of Bullhead City, is actually 130 degrees Fahrenheit in the summer. So there's safety issues. We could drill at night, but so essentially what we did is we just spent the summer kind of consolidating the data we had, the 7,000 meters of drilling. We put together that resource model, which I referred to at the start of the conversation, and we planned the 10,000 meter program that's underway right now. So essentially, the market was digesting shares through the summer, and we've now done 1,100 meters of drilling along the structure, the Tyro structure, to drive mineralization from the high-grade intercepts up to the surface in anticipation of putting out a resource model. And so that gives you a much higher degree of confidence. And so essentially we've got, we're kind of putting all the pieces of the puzzle together as we move forward. And so what the real kind of catalyst for the share price moving to the point it's at right now, which we're testing our all-time highs, is putting out that resource model at the beginning of September. And that's really put a lot of attention to us and corroborated, I think, what VanEck's been saying as well to the people that have been following.
Yeah, absolutely. I've been hearing about it. I mean, you're well funded for the current 10,000 meter drilling program. And we know that the market knows you can execute. I mean, your partnership with Kinross at Jefferson Canyon also speaks volumes. I mean, we've talked about the specific targets in the path to resource. Let's zoom out a little bit for the audience. I mean, when you look at the entire district scale land package that you've assembled at Gold Chain, from the Tyro vein to the Friskin Graben, I mean, what's the blue sky potential here? I mean, what's the ultimate prize that you and your team believe you're chasing?
World-class deposit in a
Yeah.
short answer. And as mentioned, when caliber geologist of Rob Johansson, our VP exploration, who put the district together in 2019, 2020, who's got all 50 years of low sulfidation work geologically, and then inputting it with a guy, Mark Reichman, who's got 40 years on the Walker Lane and was the lead geologist discovering Corvus's project. That to me is these are the notes of something that's going to be potentially significant. And so I think the blue sky right now is unlimited. And when, that was the thing that when I'm looking at this company, Corvus Gold never had the Graben. It's a blind target. It's a high risk target. There was no historical mining done at it, which was north of our mother lode deposit that Anglo ultimately consolidated the district around. In West Point Gold, the extension of Tyro is less than a kilometer away into that Graben. And when guys like Mark Reichman, that spent a year with Anglo drilling the Graben there, says, I've got an analogy for you up the road that I worked at. This is it. That to me was a pretty compelling. So, I can't sit there and tell you the multi-million ounce potential, but I can tell you that we've got a district that has all the showings that there's something world class there, and that's what we're going to keep chasing.
Yeah, yeah, well said. I mean, you talk about jurisdiction and that safety. There really is a premium talking to some of these majors about the M&A side. I mean, you're in these discussions, and I mean, let's bring it back to the near term. For shareholders watching today, what are the key catalysts, and what should the news flow look like over the next quarter or two as you execute on this drill program? What can they expect?
Drill results. So we've got a 10,000 meter program that's funded, which was good. We raised money in June, which allowed us to get out in front of a lot of people that are raising money now. So we have our drills on the way. We've completed the first 1,100 meters in September. We've seen the first two results come out on that, and as you referred to, 30 meters of 3 grams, and that was a superficial mineralization to depth. That is the first of 15 holes, the first 2 holes of 15. So look for more drill results from that superficial program along the structure of Tyro. Later this week, I should say now, we have another drill arriving to drill fence of holes below those high-grade holes on the north end, 47, 48, 49. So we're going to drill holes 50 to 75 meters below that. Then we're going to move the drill to the Tyro South extension. There's a target there, which is an old mining shaft with 10-gram material at surface, which looks like the structure from the Tyro Main Zone extends there. So we're going to put some holes into that while we're waiting for those deeper holes from the north end to come in. Presuming that mineralization does not look like it stops, so on the north end of Tyro, and it looks like it plunges to the north and heads towards the Frisco Graben. So we're going to come back in, and if we actually hit at Tyro South, we're going to bring it. We're planning, and we've actually got a second drill scheduled to arrive at the site by the time of U.S. Thanksgiving, the end of November. Mm-hmm. So ostensibly, we would have one drill working the Tyro Main structure, and one drill drilling the Tyro South structure. And we actually, believe it or not, we've gone so far as to book a third drill for January to drill some more core there as well. So we're going to go after this as aggressively as we can, and we're staffed up. We've now got a core warehouse in the town of Bullhead City, which is 10 minutes away from the site. with the infrastructure, as you mentioned, we've got a 4-lane highway going to the south end of the project and a high tension power line. And as I mentioned, we're just 90 miles to the southeast of Las Vegas. So we've got all the infrastructure you could possibly want. And on top of all that, we are just inside the state line of Arizona, and we're in a very pro-mining district. And our BLM agent is very supportive and very helpful with us with respect to permitting. And I can tell you, after working in Nevada at the Corvus project for 11 years, we were not getting that level of engaged support anywhere near like we're getting in Arizona. So in this area of Arizona, this is about as ideal a spot as we could possibly hope to be.
Yeah, moving quickly. Man, you know what you're doing over there. And obviously that is an advantage. High-grade results from this major GIL program. We got a proven management team and a clear vision for the future of one of North America's best mining jurisdictions. It's a story we're going to continue to watch closely. Thanks for this. Quentin Mai is the CEO of West Point Gold. Thanks for your time today. Appreciate it.
Thanks for having me. Have a great afternoon.
Yeah, you as well. I'm Jeremy Saffron. For more coverage of Kitco Mining, be sure to hit the subscribe button to the #1 source in the industry. We'll see you next time.